Tesla has just increased pricing in multiple countries in China, South Korea, and Australia. In China, Tesla increased the price for the Model Y long range by about $290, and same for the Model Y performance version, no change for the Model 3. This change comes 1 week later after the latest price increase in China. That one was for Model Y rear-wheel drive version. In Australia, the price has been increased by 274 USD. And in South Korea, for the Model Y long range, about $780. Then for the Model Y, there is a bigger increase of about roughly $2,000 if we really round it up. And then I assume that this right here, order amount, means a deposit when you purchase the vehicle, although I'm not 100% sure, but it would appear like the deposit amount has been increased by a substantial amount. The billionaire Charlie Munger just now said that BYD is better because BYD increased prices earlier and Tesla cut prices. Well, Tesla is increasing prices, so what do you say, Charlie, now? These are not huge price increases, but still, these are price increases. And if we look at the US, we can see here, February 4th, Tesla raises Model Y prices by $1,000. And then just a few days ago, Tesla increased Model Y prices by $500. So that last increase that just happened in the US a few days ago is already the third price adjustment since the major price reduction. And even in the US, Tesla started with a tiny $500 increase for the Model Y long range all-wheel drive. It started tiny, but then it snowballed. And while there have been some people that said this is all happening because Tesla is trying to scare people into buying their vehicles instead of waiting for further price reductions. And James, the one who really loves cats, he holds that position. I would tend to disagree with that because we saw a few small price decreases for the Model 3 in the US. If that was the case, I think Tesla would have increased the price for the Model 3 in the US as well. Just by at least a little bit, maybe $100 or $300. But no, Tesla reduced the price for the Model 3. Colin Rush also was on TV just now. He is the highest ranked analyst on Wall Street that also analyzes Tesla stock. There's no one who ranks higher on Wall Street than him. There is this concern growing that the recall that Tesla just issued, that was required by NHTSA, which was not really a real recall, it's basically saying that full self-driving beta cannot be used, sort of, because it is not good enough to be used, even though it is in beta. And NHTSA is telling Tesla to make full self-driving beta better. So there have been some fears now that Tesla would not be able to sell full self-driving beta to the customers because maybe NHTSA would not let Tesla use the software anymore on the public roads in the US, perhaps. So let's hear what Colin has to say about this and the recall.
Company announcing a recall impacting nearly 363,000 of its vehicles, warning its full self-driving beta software may be causing crashes. Let's bring in Colin Rush, senior research analyst at Oppenheimer. He has a hold rating on Tesla. There have always been questions, Colin, about this self-driving software, whether it was really indeed that. How surprising is this recall?
This isn't surprising at all. There's been a lot of debate and speculation around when NHTSA would get involved in regulating this technology a little bit more aggressively. This is certainly, a collaborative effort between NHTSA and the industry, and seeing this sort of, issue come up, given the accidents that have been well publicized, is not a surprise. I think what's interesting is what ultimately is the cost to the company and to the brand, and it looks like the cost of the company is going to be not terrible here. They've got about 2 months to actually rectify this with an over-the-air update. And certainly I think the brand has held up relatively well. even through Elon Musk's acquisition of Twitter and the recent price decline, given the demand activity that we're seeing right now. And so, what will be interesting for us to see who actually signs up for the service as we get into the back half of the quarter and into the next quarter.
Currently, Colin has a hold rating on Tesla stock, meaning do not buy more Tesla stock, but do not sell any Tesla stock if you already have Tesla stock in your stock portfolio. But how he is talking here, it sounds more like he is leaning more towards the side of, oh, maybe we should buy Tesla stock now. His previous problem was we don't know how all of this activity of Elon on Twitter is affecting the brand of Tesla. That is what he didn't like, and that is one of the big reasons why he changed his rating from buy Tesla stock to hold Tesla stock. It appears that he likes the demand that Tesla is experiencing, and perhaps he will soon change his rating back to a buy rating. Although previously he did say that it will take him quite a bit of time if he does change his rating back to a buy rating. He does need to see sustained demand and sustained proof that there has been no brand damage.
And just to be clear, this is on the self-driving software, which is an upgrade in itself on Tesla. I think the number is surprising people. So Tesla cars are not self-driving, right? Hasn't this always been kind of a weird gray zone and a marketing question mark?
Yeah, it's an enhanced driver assist at this point, with the option for the company to layer out incremental functionality. Certainly the ability to navigate an urban environment is something that everybody's working on in this space, and a lot of this is really around where the edges of the use case for the autonomous driving and self-driving functionality. I think what we're seeing here is that there's a lot of trial and error, and this is called a beta because it is a beta, right? And they're doing the testing out in the field, and that's where they need to be doing testing to get more information around corner cases, and they have a very active user base that's helping them do that testing right now.
So it doesn't seem that Colin thinks this recall is a big deal. And it is important for Tesla to get a lot of data, to get a lot of these corner cases. You can't really do that with a simulation or in a small area that is closed just for testing only. But over the coming weeks and months, I would expect a new argument from the bear saying, oh, the US government maybe will just ban the full self-driving beta software completely from being used in the US. So expect that, but I don't think it's anything serious. One reason why Colin liked Tesla stock before, and I'm sure he still loves this specific reason, is that Tesla's revenue grows quite a bit faster than operating expenses. So this is revenue growth. As Tesla does get a lot bigger, it is more difficult to grow the revenue by 80% per year. So we're going to stick with maybe about 40 to 50% for revenue, or a little bit under that, and then about 50% year over year for deliveries. Keep in mind that a lot of deliveries in the future will be cheaper cars, meaning that revenue may not grow at 50% per year, although deliveries may still grow at that rate. And then operating expenses, you can see, only grew by 15% in this quarter, while revenue grew 81%. And then you look at, for example, Q3, operating expenses only grew by 2%, but revenues grew by 56%. If you ever meet anyone who questions the potential of renewable energy, and especially solar energy, show them this. The amount of solar energy received by Earth could power a civilization over 100 times larger than ours. And a theoretical calculation says that we could satisfy the world current demand for power by covering 1.2% of the Sahara Desert with solar panels. Also, the price of electricity from solar declined by 89% from 2009 to 2019. Solar is still getting a whole lot better. And here's another interesting graph that I found. So right here, you can see what happens once a country reaches a 5% EV adoption rate. How fast do EVs then grow their market share? And US achieved that just recently. Right now, we are only in our second year after achieving 5%. And if you look here, around year number 6 is when we are perhaps likely to adapt 50% EV adoption. So don't get surprised when it does happen. And this is the Tesla style buying opportunity explained by Elon Musk. My name is Matt Post. Just like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.